Assalamu alaikum and hello. Welcome to New Wave Global. I am Faryal, and joining me here is Asad Ejaz Butt, a researcher in public policy and economics. Asad has been advisor to governments in the US, Canada, and Pakistan, has also been a host on Neador and New Wave Global, and is currently undertaking a doctorate in public policy and economics at the University of Massachusetts. Asad, good to have you on New Wave Global.
Thank you, Faryal, for having me. Thank you so much.
So in today's episode, we will talk about what falling inflation means. Does the fall bring the commodity prices down, and does it benefit the consumer while increasing their purchasing power and price affordability? Pakistan's inflation rate has been witnessing a decline over the past months, culminating 2 weeks ago into a 9-year record low when inflation rate hit 2.41%. Now, according to the Pakistan Bureau of Statistics, the inflation rate decreased to 2.41% on a year-on-year basis in January this year, as compared to 28.3% in January last year. So that's a huge jump. Inflation had previously touched lofty double figures when in May 2023, Pakistan's inflation hit an all-time high of 38%. So before we open this discussion, Asad, if you could just tell us what it means when we say the inflation rate has been dropping and what effect does it have on the prices?
So, inflation is like uh, inflation is the average price level in the economy, basically. Talking about it in pure economic terms, it basically measures the price of like a basket of goods which are representative of the entire economy. So it's an economic indicator basically that tells you how much prices have increased or decreased in a certain period. The most common measure of inflation is this year over year inflation, the YOY inflation, which basically looks at inflation at a certain point in time and then compares it with the price level. So it looks at prices at a certain point in time and then compares it to the prices at the same time last year. And so basically, it sort of indicates the direction in which the price level in the economy is going. So if inflation is greater than zero, which it mostly is, it indicates that prices have generally increased. If you're looking at year over year inflation, another measure, of course, is month over month inflation, in which you look at prices at the same time in the previous month. But the year over year inflation is the most popular and widely used because you give the economy a certain amount of time, which is 12 months, to see what direction it's taking. Um, if the inflation is greater than zero, like I said, that basically indicates that prices have gone up. But the decline in inflation basically indicates that while the prices are going up, they are going up at a slow rate at which they were going up in the past. And so when inflation comes down sharply, in which we can potentially talk about the impacts of inflation dropping sharply. One thing that it tells us is that when it was like 25-30% in 2022, it essentially meant that prices were going up very, very sharply and very, very quickly. But now when it has dropped to something like 4%, it essentially means that while prices have gone up, they're going up at a slower rate than which they were in 2022.
Which I think we also refer to as disinflation when the rate of inflation is going down. It's not deflation, but it's disinflation. Am I right?
Right. If yes, if prices are decreasing, that's
That's
deflation.
that's that's
But when
basically the
prices
opposite
are
of inflation.
right, yes. But when prices are increasing, which is the current case, but at a lower rate, that's what disinflation is. Yes.
Okay, so how did the inflation rate taper off in Pakistan? Has it come on the back of lower global commodity prices? a stable currency, a relatively stable currency, I would say, since Pakistan has not really carried out any economic reforms. How have we ourselves contributed towards this fall, or is it just a result of international factors like the oil and the cotton and the wheat and the edible oil prices going down, and of course the securing of the IMF loan?
Um, all of these could be contributory factors. One thing that needs to be seen is what was causing this inflation, because if we want to really sort of dissect the factors that lead to, or the policy reforms that lead to the decline in inflation, one needs to firstly see what was causing the inflation. And essentially, the inflation comes from two sources. Either it's a supply side inflation or a demand side inflation. So a supply side, the most common supply side inflation is this oil price shock inflation, which happened in 2022. And the most common demand side factor is the rise in consumer spending, for instance, which is like a huge inflationary factor. In 2022, what we were seeing was, and there was like a huge disagreement. Of course, in the West, it was very clear that inflation is supply side, but in our part of the world, there was like our historically our inflation has been demand side inflation, but this time we had like a very strong sort of interplay of demand side and supply side factors, which is why it was kind of hard to distinguish whether this was a supply side inflation and demand side. The reason I say this is because if inflation is supply side, then the moment that the supply sort of revives, like if it's an oil price shock or a supply um, um, a supply chain disruption, for instance. The moment the supply chain, like, the supply chain disruption that happened during COVID or the oil price shock that started happening in 2022, both of these are supply side factors. So the moment the supply normalizes, inflation starts to decrease because inflation is caused by two things. One, the cost of production has gone up because of the oil price shock, or perhaps the aggregate supply in the economy has gone down, which is pushing up prices. But the moment the supply normalizes, inflation comes back to whatever its long-term average is.
Hmm.
On the other side, if the inflation is demand side inflation, then the only thing that the economic policymakers do is that they increase the interest rate to bring prices down. And by increasing the interest rate, they start controlling the aggregate demand in the economy. And the moment the aggregate demand comes down, because people have less money in their hands, they spend less. And the moment aggregate demand comes down, prices also come down. In Pakistan,
This
one, inflation is
happened.
generally,
Yeah,
sorry?
this did happen in our case. We had very high interest rates, and
Exactly. But
that
interest rates
slowed
had
the
remained high
economy.
for a very long time now, but prices were not coming down. So in the first year or so that the interest rates were above 20%, prices were sticky. But then all of a sudden prices came down crashing. And this was also the same time when oil prices were actually sort of coming back to their long run average levels, which essentially meant that there could be like an involvement of these supply side dynamics also in bringing the inflation down. So I think the recent inflationary episode was like a combination of both supply side and demand side factors, and therefore while our policy intervention was only on the demand side because we were just increasing the rate of interest in the economy. I think the international economic situation where the oil prices settled at a lower level at which they were than which they were in 2022. I think both those things brought inflation down. But uh, the big concern is it didn't gradually come down, it came down crashing all the way. And we can discuss what that means for the economy.
Hmm. So basically, the government's macroeconomic stabilization goals have played a role as well. But when it comes to the role played by the IMF facility, that is, if you really believe that it did play a role, with Trump in power now and his funding cuts and withdrawal from UN agencies,
Yeah.
Do you think we have a reason to be prepared for a scenario where we might not be rescued any longer by more IMF bailouts or the next IMF tranche? What would you say on that?
Yep. I mean, it's a political question, but uh,
Slightly
I, th
political. Yeah.
I, I,
But for us, it's about survival. Remember, IMF
survival. Yeah.
just bails us
Yeah.
out.
I'm happy to comment. The only thing I'm thinking
Look at
is
the
I
money.
might not be uh, trained as a political scientist to make a good comment on it. But my thinking about this is that the Trump regime rules by creating uncertainties of many sorts, and that's the kind of populist leaders like Trump rule by fear. They rule by uncertainties, and that's the kind of regime that he's now setting up through the 160 executive orders that he signed in a day. Um, a classic case of policy discontinuity, discontinued everything that the Biden government did. And so therefore, while I think the US is an important player, it's very hard to predict at this point which way the Trump government will go.
Yes, but
If you look at his previous period also, he was in the first 6 months, he was exiting from everywhere, the Trans-Pacific Partnership, you name it.
hmm,
And the last 3 years of his regime, he was re-entering some kind of international agencies and international agreements. So I think there's an environment of uncertainty, not just within the US, but the kind of uncertainty that Trump is causing elsewhere in the world. So there is a cause of concern, but I also do think that IMF is. If you talk about IMF alone, even though the US is the largest contributor, I do think that IMF is effectively cushioned from a unilateral stance of any major power in the world. And I think institutions like IMF are not sort of hostage to
hmm.
one-sided political decisions of the US or any major
I would
economy.
say on our side, it's a good opportunity to maybe make efforts to become more self-sufficient at this point. Maybe that's how we should be looking at it. And as for now, IMF has also cautioned, coming back to inflation, they have cautioned that sticky inflation, it stays. Sticky inflation is a phenomenon where prices do not adjust quickly to changes in supply and demand, leading to persistent inflation. And IMF warns, and quote unquote, an intensification of geopolitical tensions could disrupt shipping and energy production, pushing up inflation again. Now, these trade wars that have recently begun and deportation of migrants and expansionist threats, we don't want to go to the political side, but all of that might take international oil and other prices up again. So do you think we need to improve and focus more on our indigenous economic indicators, like fiscal deficits, etc., for this disinflation trend to last?
Prayal, something that needs to be understood for an economy like Pakistan or perhaps other developing nations also is that our question of indigeneity or self-sufficiency is not about us being able to sort of arrange our own food or perhaps arrange our own money, which we essentially do. The big question which creates our dependence is that we have to arrange dollars. And that's just because we are net importing economies, especially our biggest import is energy and oil, which we do not produce indigenously. And countries that sell oil, and it's a very simple equation, countries that sell energy products, countries that sell oil, sell it in US dollars. It's a commodity denominated in the USD. And USD is something that we do not produce indigenously. And this entire economic edifice is based on these two commodities, oil and USD, the petrodollars. That's what the every developing country is running after these two things. There are developing nations that produce oil but do not have control over it. There are developing nations that do not produce oil. That's the clear sort of distinction. And then none of them, indiscriminately, none of them have US dollars and they're dependent on the West for US dollars. And then there are institutions like the IMF. that want an interest give you the US dollars, you are totally dependent on them. Now, the thing is, if you have dollar reserves like China, you're a developing nation, but you have the dollar reserves of the scale of the Chinese, then you could talk about self-sufficiency and indigeneity. But in our case, we are far, far, far from, talking about it. We are self-sufficient when it comes to cotton or wheat, or we could sustain like Iran does or North Korea does. But at the end of the day, if we are not producing oil locally and have to import it, or our industrial inputs, most of which are also imported, we have to arrange dollars, and that's the simple thing. And to be able to arrange dollars, we have to look towards the West, countries that produce dollars, including the US itself, which is the printer of the greenback. So yeah.
Okay. So this disinflation that we're talking about, do the benefits reach the consumer of this disinflation? Does it enhance their buying or purchasing power? Does it have that requisite effect?
Yeah.
What does it mean for the man on the street when economic oracles they celebrate disinflation or falling rate of inflation?
Um, One thing I didn't answer in your previous question was the geopolitical tension thing. I think I skipped that part.
Mm.
I do think that that would be a factor, but I don't think that would be as big a factor because two countries engaging in trade war, both are major players. They have the ability to disrupt the functioning of the global economy. Agreed, yes.
Mm.
But I don't think geopolitical tensions would bring an inflationary would bring inflationary pressures that the oil price shocks of 2022 or the Russia-Ukraine war brought, or perhaps the kind of inflationary pressures that COVID brought. I don't think that that would be the case. Uh, but yes, Trump's tariffs and the ensuing trade war could have an impact. On your other question about purchasing power and disinflation, yes, of course, there's a very strong connection. Of course, at the end of the day, if the um, if the rate at which inflation takes place comes down, which is disinflation, like we said, I think, of course, people have people the purchasing power would not be eroded at the pace at which it was being eroded. People would have more room and flexibility to spend, so their purchasing power would definitely increase. That's what disinflation means. But the big comment is consumer spending is dependent on inflationary expectations more than inflation itself, because people look at inflation of the past or current period's inflation and then start to expect what inflation would be in the next period. And then basically sort of align their consumption decisions in the present period based on what inflation would be in the next period, which is what inflationary expectations is. So
Mm.
I think because inflation has come down sharply, it has, in my opinion, distorted inflationary expectations. So as far as consumer spending is concerned or consumer confidence in the economy is concerned, that is kind of shaky at this point because people were expecting inflation around 15 to 20% in the present period, but all of a sudden they got the news it's now 4%. So what are people expecting in the next period? There'd be consumers in this economy who'd be thinking inflation in the next period would be 4%, which is the current inflation, or perhaps even lower because it's coming down. So somebody might be thinking, oh, it's come down crashing all the way. It might go down even further in the next period. But there'll be people in the same economy who think, and like your previous question, who think, oh, there's this international global economic dynamic right now between the US and China. So inflation could go back up rising. There'd be third kinds of people in the economy who'd say, no, it might not rise, but it would stay at 4%, or it might not decrease either, might not rise either, but it would stay around 4%. So there could be those kind of consumers in this economy. And this is what distorted inflationary expectations means, because because of this sudden drop and this large, significant drop in inflation, expectations are distorted. So people who are thinking that inflation is going to come down even further, would stop spending, even though their purchasing power has increased because of the disinflation. But they would not be spending in this period. They would want to defer their spending to the next period, thinking that inflation is going to come down even further. People who would think that it might go back up because of geopolitical issues might just do panic sort of spending in this period, thinking that, inflation might go up in the next period. So, for instance, people investing in the real estate sector might want to buy like big properties or invest in which is a sector that takes a lot of big investment in Pakistan, might want to buy properties in this period because they might think that the inflation might go up in the next period and real estate sector or properties might become more expensive again in the future. So all I'm saying is that inflationary expectations are distorted, even though people uh, might have more purchasing power. It is yet to be seen, and it's hard to predict because of the distorted inflationary expectations that people are spending more or less. It's very hard to predict. I've not looked at the numbers yet, but it'll be interesting to look
And
at numbers and how they
and
go up in the
the
future.
purchasing power does go up, like you're saying, but then rate of wage increase hardly ever matches rate of inflation here in Pakistan. I don't know about other
Yeah.
countries. Also, there are other statistics that are sobering, like the current poverty rate in the country. It stands at 40.5%, with an additional 2.6 million Pakistanis who are living below the poverty line.
Yeah.
So these are statistics that are quite sobering. So governments, they capitalize on this decline in inflation rate to build a positive narrative that the cost of living has come down due to their policies, which to some extent it might even have. But then there's much to unpack in this claim, because in reality, cost of living has not gone down as claimed, while also it is said that the CPI inflation index, it doesn't actually capture the cost of living in real terms. What is your take on this assertion? Does this
Um,
index take into account, for example, the rising power bills as well? Uh,
I think there are two to three issues with the CPI, which is like the I mean it does capture, of course, but does it fully capture is the question. It does capture inflation or cost of living, which is why it's been one of the most popular measures of inflation for a number of years now. But one thing that the CPI doesn't do is there's something called the substitution bias, which essentially means that CPI has like for a certain period has like a fixed basket of goods, but people are, as prices, especially in an inflationary environment when prices are going up, people are quickly substituting commodities. So a standard consumer basket is subject to change, and that change during a certain period is not captured by the CPI, which looks at a fixed basket of goods. So one is the substitution thing. Two, there is this element of value added. You're looking at a certain quality of a product, but sometimes during a certain period, the same product is now a better quality product, and that value added or enhancement in the quality of a product is also not captured by the CPI, which essentially means that you are overstating inflation. The third, I think, issue is also about new goods, which continue to be consumed in large quantities by consumers. But because the CPI's consumer basket, a standard representative consumer basket, is fixed during a period, those new goods are also not reflected in the inflation, which also essentially means that inflation is overstated by the CPI. There is something called the chained CPI, I think, which is now also a measure of inflation, very popular measure of inflation in the US, which is which has a more flexible basket, in which new goods are constantly reflected, and so on and so forth. And the consumer basket is constantly subject to change. So the chained CPI basically is always represents a slightly lower rate of inflation than the standard CPI, which is why, one of the criticisms of the CPI is that it is slightly overstated.
mm,
Um, having said that, it does still capture inflation and is a good indicator of inflation. There could be like a standard error, 5%. of the rate of inflation higher or lower. That could be the case. I don't know what the chained CPI is for Pakistan. I've not looked at the number, but it would be if CPI inflation is 4%, it could be 3.5, 3.6%.
So
Yeah.
how healthy is this low inflation for a developing economy, even in the short run, or does it benefits they only manifest if disinflation can be sustained in the long run? And how long a duration should that be for an economy to basically see some benefits coming in from that?
Yeah, inflation, there's an element of something called overheating of the economy. If inflation is too high, it contributes to economic growth, but the economy heats up. And then heating up essentially means that inflation lends or very high periods of growth lend more to deficits than they lend to actual growth. So in Pakistan's case, we know that, uh, periods of excessively high inflation erode purchasing power, distort inflationary expectations, and so on and so forth. So very high inflation is bad for the economy, but so is very low inflation in especially developing economies like Pakistan. So anything around 4 to 5% is healthy inflation for the economy. It's not too high, it's not too low, which is the inflation rate right now. But can we stabilize it at this rate for in the long run is a big question. Essentially, I think the idea that needs to be seen, which is represented in economics by something called the Phillips curve, is that there is a trade-off between economic growth and inflation. Too high inflation means and sorry, I mean, you could call it economic growth, but there's like a trade-off between unemployment and inflation. So essentially, what you're looking at is that you don't want um, uh, uh, excessively high inflation in the economy, but you don't also want very low inflation. So I think a case for a country like Pakistan, which are developing economies, also need economic growth, is to have some inflation which lends to growth, but doesn't have inflation which is very low and then contributes negatively to economic growth. So that's the idea. Yeah.
Yeah, that was my next question. In fact, that does this disinflation it cause does it cause sort of affects growth and investment to plummet and trigger
Um,
an increase in joblessness as well?
again, I mean, it could affect
I'm talking
unemployment.
Pakistan's
Yes,
case. Has this
yes,
been happening here?
it could affect unemployment. Yes, because it was a sharp drop. But as far as growth is concerned, I think people have different opinions on it. But I think if inflation, again, going back to the factors that cause inflation, if inflation was demand driven in the first place and it came down because of an increase in interest rates, you would see that economic growth, would come down.
And
But
so
if inflation,
investment, investment as well, that has happened.
Not investment directly, but yes, if the interest rate goes up, investment goes down. That's the rule of the thumb. Um, but again, with interest rates also, as inflation has kept coming down, Pakistan has been reducing the rate of interest also, which is why inflation, even though it's higher than the rate of interest rate, even though the policy rate is higher than the rate of inflation right now, it has been coming down over the past 6 months or so. So as far as investment in the economy is concerned, with the interest rate now coming down, investments would go up as opposed to coming down. But I think if inflation was uh, predominantly demand driven, which I think it wasn't, um, the increase in interest rate and a high policy rate environment would compromise economic growth in the current period. So I think growth numbers would stay low, but inflation has also come down, which is a good sign for the economy, but it would have been better if it came down gradually as opposed to a sharp decline, which, like I keep saying, distorts inflationary expectations.
So can it also go up the same way? Take a sharp upward turn as well
I
when
don't think it would be a sharp rise again.
mm,
Um, because of just geopolitical tensions, but it might inch up slightly because of geopolitical tensions. Yeah. So we could see it going back up to something like under 10%, but it might not go back up to the 30% average that it was averaging in the fiscal year 2022.
I think that's the prediction, that it's going to probably stay in high single digits
Yeah.
throughout the
Yeah.
whole of 2025, or maybe
Yes.
low double digits. That's what the prediction is. Uh,
Exactly. Yes.
so,
Yes.
Asad, thank you very much for your time. Inflation is not just about numbers, but about how it affects the daily reality of millions of Pakistanis who have to make taxing choices between bills, food, fees, and other utilities. Until the cost of living becomes manageable for most of the public, their struggles continue. To win the battle against inflation, we need to go beyond temporary fixes and address underlying causes, improve our economic indicators to proactively curb inflation and not just rely on international trends. And with the holy month of Ramzan only weeks away, we wouldn't want to see prices of essentials take a big leap upwards again. Asad, thank you again for your time and your very valuable input and views. That's all for now. Till next time, Allah Hafiz and goodbye.